Taxes. Picture this. You work all month at McDonald's. $2,000 paycheck. You check your account. Only 1,456 shows up. The rest? Gone. Where did it go? So, who took it? You open your pay stub. Federal income tax, state tax, Social Security, Medicare. Every month, part of your paycheck goes to invisible forces, and you're expected to smile about it. Why we pay taxes. But here's the question. Where does all that money go? Taxes are the price of civilization. You pay and the government builds roads, funds, schools, keeps your favorite taco truck rat-free, and yes, buys billion-dollar missiles for places you've never been. The types of taxes. And not all taxes are the same. Income tax, money you earn. Sales tax, money you spend. Capital gains, money your investments earn. Social Security tax, forced retirement savings. Medicare tax, health insurance for older people or those with serious health problems. The filing game. And then comes the game. Filing taxes. The government already knows what you owe, but makes you guess. Guess right, great. Guess wrong, you're toast. Some pay quarterly, some yearly. Some don't pay at all and become Netflix documentaries. From taxes to banks. And if taxes take a slice of your paycheck, banks have their own slice. You hand over your money, they smile. You imagine it locked in a giant vault guarded by a dragon. Reality? It's already gone. Banks aren't vaults. Banks are middlemen. You deposit $1,000. They loan $900 to someone buying a jet ski. That's fractional reserve banking. They keep a small fraction in cash, unless it's 2008 when everyone wanted their money at once. How banks make money. So how do banks profit? They lend your money at higher interest than they pay you. You keep your money there because it's safer than under the bed. It's convenient. It's insured up to $250,000. And maybe earns a little interest. Interest. Friend or enemy. Here's where it gets tricky. Interest. If you borrow $1,000, you pay back $1,280. That's interest. Rent you pay for using someone else's money. Simple interest is a flat fee. Compound interest. Interest on interest. At 20% credit card rates, debt explodes fast. At 7% investment growth, your money doubles. And doubles again over decades. Inflation. Ever feel like your paycheck is shrinking? That's inflation. When prices rise, your money buys less. It's caused by high demand, low supply, or even the expectation prices will rise. A little is normal. Too much kills savings. Governments fight it by raising interest rates to slow spending. Recessions. But slow spending can have side effects. Sometimes the brakes hit too hard, and the economy shrinks for at least 6 months. Jobs disappear, markets drop, people stop spending. Recessions hurt, but they also reset the economy so growth can start again. Credit scores. Here's your personal financial report card. Your credit score, 300 to 850, is your trust rating for lenders. Higher score means better loan deals. It's based on payment history, how much credit you use, account age, types of credit, and new credit requests. Pay on time, keep balances low, build history. Money isn't real. And here's the weird truth. Money isn't real. It's an agreement. Dollars, euros, Bitcoin. They're valuable because we all agree they are. Too much printing causes inflation. Too little causes recession. Investing. So how do you keep your money's value? To beat inflation, you invest. Stocks, bonds, real estate. It's not luck, it's patience. Diversify. Let compounding do the heavy lifting over decades. The big picture. And when you zoom out, gold is just a shiny rock until people agree it's valuable. Time is your most valuable asset. You trade it for money at work. You multiply it through investing. Wealth isn't built in days. It's built over decades. Small, steady steps, big results. So that's money in a nutshell. Taxes take their slice. Banks flip the rest. Interest can be your best friend or your worst enemy. Inflation eats your paycheck. Recessions hurt but reset. And wealth? It's built slowly, step by step. If this breakdown helped you see money a little clearer, smash that like button, subscribe for more simple explainers, and share this with a friend who needs a financial wake-up call. Because understanding money isn't just power, it's freedom.